everybody for joining us today. My name is Michelle Rogers, and I'm with the marketing department here at NeighborWorks Montana. And today we're having our webinar about our State HOME Deferred loan product. Just a few housekeeping items before our presenter. First one are on. That way we can get some of the background noise. So this webinar will be recorded, and if anyone's having a hard time hearing us, just go ahead and send us a message and through the webinar and let us know that. Again, just a reminder to mute your lines. And this, for this webinar, for those of us who joined us last time, we had a silent question and answer period at the end. This time we're going to open it up for live Q&A. So if you do have any questions, be sure to write them down as we go through the presentation, and then we'll open up the lines for everyone to talk. So with that, our presenter today is Lori Yurko. Lori has been with NeighborWorks Montana since 2004, serving as a loan specialist. She brings a wealth of knowledge to the world of lending and is a ray of sunshine around our office for sure. So without further ado, here's Lori.
Hi, everybody. I don't know if I'm a ray of sunshine, but I'll just go with that. That sounds good. Hey, I looked at the list of registered folks for the webinar, and I was so excited to see so many familiar faces and so many new faces. So thank you so much. Thank you for taking the time today to let us share information about the NeighborWorks Montana State Home 0% Deferred Subordinate Mortgage. And I'm going to call it a subordinate mortgage product, and then at times I'm going to call it a subordinate mortgage program. So I'm going to interchange those two words, product and program, but they mean the same thing. Our marketing department, they're going to giggle over this, but they like me to use the word product. But the lending part of me likes to use the word program. So just know, product, program, all the same. We know you want to be able to help every client that walks through your door. Some clients are ready to go, while others need more options to achieve their goal of home ownership. NeighborWorks Montana loan products can help more of your clients become successful homeowners with subordinate financing that best meets their needs. Please know, we certainly don't expect you to know everything about our subordinate mortgage loan products. We just want you to know, and I will say this sort of humorously, we just want you to know enough to be dangerous. We want you to know that NeighborWorks Montana is out there with subordinate mortgage programs for down payment and closing cost assistance. We're here to help you, and we're here to help your clients. If you have a client who you think might benefit from a NeighborWorks Montana loan, give us a call. As I like to say, we're in Great Falls, but we're only an email away, we're only a phone call away, we're only a website away.
Just another reminder, if you are on, please go ahead and mute your lines just so we can reduce the background noise. There's still somebody who is not muted. Could you go ahead and mute your line, please?
Okay, the mission of NeighborWorks Montana is to create opportunities for families and individuals to live in affordable homes in strong communities. What does NeighborWorks Montana do? Well, we work to make homeownership affordable. We provide housing, education, and counseling across Montana through a network of HUD-approved counseling agencies. We provide home loans for individual home buyers. We help homeowners purchase and successfully manage their mobile home parks through our resident-owned community program. We provide financing for affordable housing developers through our real estate development and acquisition funding. And we are a certified packager and intermediary of USDA RD 502 direct loans. And what does that mean? In essence, it means instead of going to rural development to apply for a USDA RD 502 direct loan, the applicant can come to us, NeighborWorks Montana, to apply. The first step to creating a successful homeowner is education. Educated homeowners stay in their homes longer, take pride in their properties, and have 1/3 less foreclosure. NeighborWorks Montana's network partners across the state offer classes on all aspects of homeownership. All classes meet HUD requirements and are taught by certified educators. Completion of a NeighborWorks Montana certified homebuyer class is a requirement for many specialized first mortgage loan products and is a requirement for all NeighborWorks Montana programs. So please encourage your clients to take homebuyer education early in their home buying process. Our class will help them make informed decisions throughout their home buying journey. The NeighborWorks Homebuyer Education class is not just for folks using a NeighborWorks Montana loan product. It's not just for folks whose first mortgage requires it. It's for all folks. It's for everybody. And we do encourage as many people as possible to take it. So please, please encourage your clients to take this homebuyer education class early in the process. Through our home buying education process, your clients will be made aware of the NeighborWorks Montana loan products. They will learn how our programs may be able to assist them with down payment and/or closing costs. And they will learn that our products can help maximize their purchase power. We promote sustainable homeownership by offering guidance beyond the purchase. Not only do we provide homebuyer education and counseling, we provide financial education and counseling, foreclosure prevention counseling, post-purchase education and counseling, and renter education and counseling. Okay, you might ask yourself, how can I use the NeighborWorks Montana lending programs? How do I become a NeighborWorks Montana lending partner? How does my lending institution become a NeighborWorks Montana lending partner? In order to participate in NeighborWorks Montana loan programs, there are two requirements. Number one is the lending institution must have an actual office, a brick and mortar office in the state of Montana. The second requirement is the lending institution must be either USDA RD approved or let's say Montana Housing approved, Montana Board of Housing approved. So you must have an actual office in the state of Montana, and you must be approved by RD and/or MBOH. Just a quick side note, I just want to say for one of our programs, and it's not this program, it's an amortized second program that we have, and we call it the 20+ Community Second Program. For that particular program, there's an additional step to becoming a lending partner. And that step is that the lending institution must participate, and that means contribute financially at a certain level to the NeighborWorks Montana bond pool. So any additional information about that 20+ Community Second Program and becoming a lending partner for that program, please contact Pat Sogendorf, the lending department manager, and her info is on the last page of this presentation. But for this program, you just have to be in an actual office, brick and mortar office, and be approved by RD and/or MBOH. Okay, page 5. Let's dig into this program. NeighborWorks Montana, State Home 0% Deferred Second Mortgage. It is a deferred second mortgage for down payment and closing cost assistance. I like to say it's a 0% deferred second mortgage for gap financing because it truly helps your clients maximize their purchase power by possibly up to $25,000 and in some cases by possibly $40,000. Okay, so let's go to that page 5. We'll look at the loan amounts. The minimum loan amount for this program is $2,500. The maximum is $25,000. In some areas and in some circumstances, we can go up to $40,000. We can go up to $40,000 in 3 instances. One is if a member of the household is disabled. 2, if the property is in a high-cost area. Or 3, the home is a manufactured home on a permanent foundation. So let's go back to the disability. The disability really does not have to be documented. It's a self-declared disability. The high-cost areas are currently Flathead County, Carbon County, and the city of Red Lodge. And when it comes to the manufactured home on a permanent foundation, FHA foundation rules apply, and it must be larger than a single wide. Manufactured homes that are built prior to '78 are ineligible. If the manufactured home was not directly purchased from the manufacturer, a separate inspection by a certified mobile home inspector will be required. And NeighborWorks will order that particular inspection. The mortgage is a lien against the property. The mortgage does not accrue interest or have monthly payments, but will have a maturity date of 15 years. If the borrower is still occupying the property as their principal residence at the end of 15 years, the maturity date will be extended for another 15 years with the same terms as the original note. We like to call this loan a due on sale loan. The note becomes due and payable upon maturity, or if any of the following occurs prior to the maturity date. And those are termination of use as borrower's sole primary residence, the sale, lease, rental, or transfer of the property, death of the borrower, upon refinance of the first mortgage, and upon repayment of the first mortgage. Going back to upon refinance of the first mortgage, in very rare cases, and I do say rare, the funder of this particular loan may agree to subordinate, but that's in very rare cases. And then again, we're going to stick in our education because it's so important. And for any NeighborWorks Montana loan program, the borrower must take a NeighborWorks approved homebuyer education class prior to close. You can get on our website, go into home ownership, choose find upcoming class near you to find out when the next homebuyer education class in your area will be. I think you can search by county and you can search by category. And category would be like the type of education. So you'd look for homebuyer ed if you wanted to do category or search for county. Okay, I want to say, we're going to go on to page 6. This program does not use NeighborWorks Montana funds. This program uses federal funds, federal home funds, HOME, that pass from the Department of Housing and Urban Development, HUD, through to the Montana Department of Commerce. And by contract with the Montana Department of Commerce, we, NeighborWorks Montana, lend out these funds. We administer this program for the funder, Montana Department of Commerce. So in the time to come, I might say MDOC, MDOC, Montana Department of Commerce. So if I say MDOC, you'll know that's Montana Department of Commerce, the funder. With this being a federal program using federal funds, not NeighborWorks Montana funds, this program has special nuances, special requirements, special inspections, and a few extra steps. a few more steps than our other programs. Adding any additional layer of financing adds extra time to any transaction. Adding this program as an additional layer of financing adds a longer time frame to the transaction. It is important that all parties to the transaction using this program are made aware of the longer time frame on these loans. The program may seem cumbersome at times, a bit more complex than our other programs, but it is oh so worth it to the borrower. You know, the borrower is getting a substantial subordinate mortgage, 0% deferred. Okay, in order for NeighborWorks Montana to use this funding, this particular program must be approved where the home is being purchased. So the program needs to be approved in the area, the city or county where the home is being purchased. So when we look on page 6, you can see that where we are currently approved. We're currently approved in these counties and these cities. Down on the bottom, we cannot use our funds in any of these cities or counties listed on the bottom. I like to call this a pot of funds. It's a pot of home funds. So we get our pot of home funds, and then these people on the bottom, they also get a pot of home funds. So because they also get the same funds, we're unable to use our home funds there. So those are the cities of Great Falls, Billings, and Missoula. And so you'll see where they're serviced. So their home funds are serviced by City of Great Falls, City of Billings, or City of Missoula. Then we do have a few counties that we cannot use our funds because they have their own home funds. And those are the counties of Gallatin, Park, and Marr. Those three are serviced by the Bozeman HRDC. And then the counties of Missoula, Mineral, and Ravalli. Those are serviced by the HRC in Missoula. Now, what determines if we need to have city approval or county approval? It gets kind of confusing, but really all you need to do is call us. We have this handy dandy little website that we go to, and we can tell you and ourselves where we need to start with an approval process, the city or the county. We have to have city approval if the city is an incorporated city. An incorporated city will have elected officials at the city level. The approval starts with the county if the city is not an incorporated city. So we start with the county if the city is not an incorporated city. And an unincorporated city does not have elected officials at the city level. I'd say it's been about 3 to 4 years since we've been able to request the addition of additional approved areas. The program calls them jurisdictions. But drum roll, exciting news, relatively hot off the press. The funder of this program, MDOC, Montana Department of Commerce, has just opened up the process of adding additional jurisdictions, adding additional areas where this program can be used. Now, this approval is a process, and it's a federal process, so the process will take time. Since this announcement, we're currently working on Ennis, Madison County, Polson, and Conrad. Again, is an approval process, and it's approval process between NeighborWorks Montana, then the city and or the county, and then the funder, MDOC. So we first determine, and we might ask your help because we're going to have some contact names for these areas. We're going to have to know if we need to contact city commission or county commission. And NeighborWorks will make that first connection with whom we need to, either the city or the county. We send them a bunch of paperwork. The city or the county must pass a resolution or a letter of support that they want these federal home funds to be used in their community. In addition, the city or county must appoint someone to perform an environmental review for us. So once all this paperwork is done by the city and the county and the appointment is made for someone to do the environmental review, the paperwork comes back to NeighborWorks Montana, and we forward it on to the funder, MDOC, for final approval consideration. So in terms of time frame, I can't really give you a time frame on adding these new jurisdictions. I can't give you a time frame at this point in time because with the 4 new ones that we've been working on, Ennis, Madison County, Polson, and Conrad, we haven't gotten to fruition yet. So just please know that it is going to take some time for this approval process, but it's oh so exciting that we can start adding new jurisdictions. So if you have areas that you'd like to add, let us know. We'll want to get the approval process going, so when you have a loan that needs one of these 0% deferred subordinate mortgages, we're ready to rock and roll. So I guess, you know, you can contact any one of us. Just email us, call us, but think about where you think you might use this program, and let's get that area approved. Just remember, it's a process, so it's going to take some time. I want to give you an idea of where we're currently been using these funds. We use them really heavily up in the Flathead area, Kalispell, Columbia Falls, Big Fork, and the big town of Marion. We use them a lot in Lewis and Clark County, Helena and East Helena. And we use them a lot in Silverboat County, Butte. Other areas, I kind of looked back a year plus, and other areas we've used them in: Lake County, Ronan, Lincoln County, Libby and Troy, Carbon County, Red Lodge and Roberts, and Yellowstone County, Park City, Laurel, and outside the city limits of Billings. So Yellowstone County, you'll see, is an improved county, but the city of Billings, we can't ever use home funds there because they have their own home funds. But Park City is an unincorporated city. They don't have a city form of government, so we don't need to have the city approved. All we need is the county. So we're approved in Yellowstone, so we could do them in Park City, Laurel the same way. And then we have done some loans in Billings, not in Billings, but with a Billings address that are outside the city limits of Billings. We can do outside of the city limits of Billings. Even if we've got a Billings address, we just need to prove that that property is outside of the city limits. Same with Great Falls. We can't ever use the NeighborWorks Montana home funds in the city of Great Falls, but we can certainly use it outside the city limits of Great Falls. So I know we had a couple of loans with a Great Falls address, but the actual property was outside of the city limits of Great Falls, so we could do that. So that just kind of gives you an idea where we've been using these funds. I have some news I need to share with you. It's not really a wah-wah moment, but maybe just a bit. We're currently waiting for additional program funding dollars from the funder. And you know who that is, Montana Department of Commerce. It's not a big deal. This happens periodically. We always get our money. No need to worry. The funder advises that we should have our funding any day. So I'm hopeful that we will have funding in place within the next 2 weeks. Feel free to send in loan request packages. We'll get started processing, doing what we need to do, getting out our initial disclosures. We just will be unable to approve until we receive our next batch of funds. Okay, let's go over to page 7. We'll get into the income. This program is for the lower income borrower. It's available to households with 80% AMI, adjusted median income, or less annual income. All household income sources will be used. So please know when NeighborWorks Montana calculates your income on the loan request, we will use all household income. Sources from anyone 18 or older that receives any sort of income. Our income spreadsheet can be found on our website. The income spreadsheet is by county and by family size. First-time homebuyer, again, for this program, you have to be a first-time homebuyer, have not owned a home in the last 3 years, or a single parent with dependent children, or have a disabled family member living in the household. The program is for single-family properties, single-family dwellings only. Property cannot have been rented in the past 90 days unless tenant is the buyer. And this is a really big one with this program. There's no waiver on this. The property cannot have been rented in the past 90 days unless tenant is buyer. And the property must be owner occupied for the term of the loan. What kind of first mortgage can you use in conjunction with this NeighborWorks Montana program? Well, our number one first mortgage preference is FHA, RD, or VA sold to MBOH. So our first preference is that it's MBOH for 2 reasons. With MBOH, you can get a special set-aside interest rate from Montana Board of Housing. Currently, this rate is 3.75. If you use your first mortgage in conjunction with this home deferred subordinate mortgage. When you reserve your funds, MBOH will require a sponsor letter, and that's really just a copy of the NeighborWorks Montana approval letter. The second reason we like you to use MBOH first is that this particular program requires a match. And the match is just automatically taken care of if the first mortgage is MBOH. Now, we can use this program for non-MBOH loans. They may be eligible if they have acceptable match of at least 5% of the NeighborWorks Montana home loan amount. So what we say is if you're going to use a loan that's not MBOH, call us and check with us before submitting, just so we can confirm that we've got the proper match.
And I am seeing some questions come through chat. I just want to remind everybody, we will be having a live Q&A session after Lori is done with her presentation. So do be writing down your questions so that you can ask them in live time, okay? Thank you. Go ahead, Lori.
Thank you. So for those non-MBOH first mortgages, and they can be FHA, VA, RD, or conventional, we need to make sure we have match, which is 5% of the NeighborWorks Montana loan amount. So if we've got a loan amount of $25,000, 5% is going to be $1,250. So we've got to have $1,250 in an acceptable, eligible form of match. What is acceptable in terms of match? Well, we can look at seller paid, we can look at a lender credit, and we can look at cash contribution from non-federal sources. So if we can document that the funds are from a private source, not the home buyer, and that it's not a loan, that the funds will be contributed permanently to the affordability of the house, then we can count it as match. We have to go to extra links to show that the match is not the home buyer's cash, but another private entity's cash that is being contributed. An example, let's talk about a gift. If the home buyer gave the gift, somebody gave the home buyer a gift, they have it, then the home buyer gives the gift to the title company to hold until closing, it's not a match. If the private entity gives the gift to the title company to close, so Dad who's giving a gift of $5,000, Dad makes the check out to XYZ title company and deposits it with the title company to hold, then we can count it as a match. So just, I know some of this is complicated, but just give us a call. We'll help you through it. We get confused too. Okay, so I want you to know that statewide, this is the only program that we can cover the 3.5 required FHA down payment with our loan. If the first mortgage is FHA and the borrower needs help with their 3.5 down, we will close the subordinate mortgage in the name of the funder, MDOC, Montana Department of Commerce. Normally, we would close the loan in NeighborWorks Montana, but because we need that instrumentality of government, we need that ability to lend that 3.5, MDOC allows us to close the loan in their name. But NeighborWorks Montana will continue to act as administrator, and NeighborWorks Montana will close the loan, and NeighborWorks Montana will service the loan. It's just kind of a way that for this program only statewide, that we can lend that FHA required 3.5 down. For this program, there are purchase price limits. You can see those on our website. If the property is built prior to '78, we really can't have any paint problems. And an environmental review and HQS inspection are required, and NeighborWorks Montana will order this. An environmental review will show if the property is in a 100-year flood zone or if the property is located within an airport hazard area. If the environmental review shows that the property is in a 100-year flood zone, NeighborWorks will require flood insurance on the property for the term of the loan. If the environmental review shows that the property is located within an airport hazard area, the property may not be eligible for home financing. Then we have the HQS inspection, HQS standing for Housing Quality Standards inspection. This inspection will look particularly at the health and safety issues. If the property fails the HQS inspection, the repairs must be completed by the seller and a re-inspection done. The HQS inspection must pass prior to NeighborWorks Montana forwarding file to the funder for final approval consideration. If deteriorating paint is noted on the HQS inspection and the property was built prior to '78, the property is not eligible for home financing. So we want to make sure that any paint issues on something built prior to '78 are corrected and taken care of prior to the HQS inspection. I also want to add that non-occupant co-borrowers are not allowed on this program or any of the NeighborWorks programs. Okay, page 8. Let's look at the credit guidelines. As with all of our programs, mid-credit score less than 640 requires NeighborWorks management approval, a management credit rate waiver. I can honestly say I don't think I've ever seen anything denied for a credit score. We may, and we will probably ask for some additional items if you've got a mid-score less than 640. We'll probably ask for a VOR, verification of rent, an applicant credit explanation letter, and a letter from you, the lender, as to why NeighborWorks Montana management should grant a credit waiver. The ratios, well, our printed ratios are 32:41, unless valid compensating factors apply. In pencil, you could write 42 because we really can go up to 42 on this program, but we cannot go over 42. Because we're not the funder on this program, we don't have as much flexibility ratio-wise as we do with our other programs. We do have a bit more flexibility on the front end. So if you're over 32 and you've got some good compensating factors, we'll be fine. But that back end, if it's over 42, it's going to be tough to get it approved. It has to go to the funder for approval, and they're very tight with granting their ratio waivers. So if we can stick to 42, we're good. Now, one important part of this program is that the housing ratio must be at least 29%, and that's 29% of the monthly household gross income. Why, you ask? Well, the feds tell us that if the housing ratio is below 29%, we are over-subsidizing the borrower. So we need to make sure that that housing ratio is at least 29%, and in a perfect world, not over 32%. But remember, we've got some flexibility on that housing ratio. So if we're over 32% and we've got some good compensating factors, we should be fine. But we will have to have management approval on the exceeding the 32 front end. This is one of the reasons I like to call it gap financing, because just as long as we've got that housing ratio at 29%, we can come in with whatever the borrower needs up to that maximum loan amount. So really, as long as we're 29% or more, we can put in as much of that maximum, up to the maximum loan amount that the borrower needs. Now remember, these ratios are based on the NeighborWorks Montana income calculation. So when we receive your package, we will calc the income. And again, because we're not the funder, we will be calculating the income per guidance from the funder, MDOC. And sometimes they look at things a little bit differently, but normally we're pretty good. Sorry about that. I just want you to know that it is sort of dictated on this program how we calc the income, and it is dictated from the funder. The funder doesn't allow any grossing up in terms of the income calc. We can use grossing up as a compensating factor, but we will not use it in the income calculation. And for this program, household income will be used. So remember, household income. And household income is for all occupants of the home, age 18 or older. Okay, CLTV. CLTV cannot exceed 105%. And then we're also going to want the borrower to have a little skin in the game. We're going to want the borrowers to have a minimum of 1% of the sales price, or $1,000, whichever is higher. Earnest money does count towards this contribution amount. Items paid outside of closing by the borrower, home inspection, appraisal that are paid outside of closing by the borrower can count towards this contribution amount. We will want those items to show on the first mortgage CD as POCB. And then gift funds are also allowed to be used as borrower contribution. One item that cannot be used towards borrower contribution is Federal Home Loan Bank Home Start funds. We use those funds a lot with this particular program, but they cannot be counted towards the borrower's contribution. Okay, we'll go on to page 9. As with all of our programs, this program has asset limitations. Total family liquid asset limitation cannot exceed $5,000. Total assets cannot exceed $70,000. And borrower cannot own any residential rental property. Now let's say at application time, the borrower has liquid assets over $5,000. Anything over the $5,000 we will require be put in the deal. So let's say the borrower has $9,000 in liquid assets at application time. We will approve the loan subject to the borrower contributing $4,000 of her own funds at closing. because we need to get that down to the asset limitation, the liquid asset limitation of $5,000. No fees are paid by the borrower with this loan product. All fees are paid by NeighborWorks. We do record a deed of trust. We also record a deed restriction agreement. This says must be in second lien position, and really it needs to be in second lien position, but under some very limited circumstances, the funder might look at going into third lien position, but we would need to talk about that. I know of one example where they go into third without any questions asked, is with the NBOH plus 0% deferred down payment assistance program. So with that program, your first is an NBOH, then your second is the NBOH 0% deferred, and I think the max on that program is $6,500. This program will go into third with that NBOA plus 0% deferred program. So that is an instance where this loan would go into third, but by going into third with our state home loan, you lose the availability of that special set-aside rate. And so just know if we did this and this particular loan product went into third position, you would lose that availability of that special set-aside rate for the first mortgage at NBOH. Okay, page 10, kind of the process. What do you do if you find something and it's in an approved area and the borrower's income is 80% or below, and you think it's really going to go? The request from you, the first mortgage lender, is how you ask for our funds. The first mortgage lender sends the loan package to NeighborWorks Montana using the reservation checklist, and it's the checklist that we use for all of our programs, and it can be found on our website. Please know most everything listed on that reservation checklist we need initially. Some items that can be forthcoming: appraisal, title commitment, home buyer ed cert, but pretty much everything else we need. It does state it on the reservation checklist, but for income, we will need a written VOE and 2 months pay stubs. Within 3 days of receipt of the application, and at this point, we're still not set up to accept online applications, so the application package must be mailed or overnighted to us. So within 3 days of receipt, NeighborWorks Montana will have initially reviewed the loan package and will send the applicant the required NeighborWorks Montana loan estimate and initial disclosures. When the initial qualification has been established, we will order the environmental review and issue a conditional approval letter. Once the appraisal has been received, we will order an HQS inspection and will send you, the lender, some documents that will require seller's signature. And one of those is a seller's right to withdraw. We call that our voluntary agreement. And this form advises the seller of the fair market value of the property and informs the seller they cannot be forced to sell the property for less than the fair market value. Additional forms we may send, we will send. We require the seller to sign a not rented affidavit. And then if the property is built prior to '78, we have a funder specific lead-based paint disclosure that must be signed by all parties. And once we get passing HQS and a passing environmental, and we get these seller signed docs back, we have a copy of your NBOH reservation, if it's an NBOH first, and we have the appraisal and an acceptable final inspection, if that final inspection is needed. NeighborWorks will submit the file to the funder, Montana Department of Commerce, for final approval. And I will tell you, as of late, this approval process has been taking 5 to 7 business days. So just know that even though we have everything, we still can't close because we need that funder final approval. And I just want to say the final NeighborWorks loan amount will not be determined. Sorry about that. Final NeighborWorks loan amount will not be determined until NeighborWorks Montana and the first mortgage lender have approved the first mortgage CD. So there won't be any principal reduction at closing. If anything needs to be adjusted, the NeighborWorks Montana loan will be adjusted. And so we will close with just exactly what the borrower needs, taking into consideration how much they need to bring in for their contribution. I wanted to, we're going to Q&A. Okay, I was going to maybe give you an example of one, but I really don't need to. Maybe just really quick. Okay, sorry, I'm long-winded. Just an example of one that I just worked on, just to give you a little example. Family of 4, Flathead County, Kalispell. So I know we're approved in Kalispell, so we're good. Single mother with 3 dependents. First mortgage is an MBOH, FHA. So we've got the MBOH match, FHA. The borrower did need help with her 3.5 down. So we closed the loan in the name of the funder, Montana Department of Commerce. I calc the income at about 78.02 AMI. So at 78, she's below 80. So she fits income-wise. The ratios, 29-31. So we're at the 29, which we need to be, and we're below the 42. Mid-credit score was 669. I didn't need to ask for anything else. The sales price was $225,000. So I look on the sales price limit spreadsheet by county. The sales price limit for Flathead County, existing home, is $235,000. So 225 is below that, we're good. So the first mortgage ended up being $192,000. We came in, I actually approved the subordinate financing at $40,000, but the borrower only ended up needing $37,380. The CLTV was 101. For this particular program, for this particular transaction, the borrower had to bring in about $4,000. And the reason being, she was over assets. So instead of requiring her to bring in a minimum of 1% of the sales price, which would have been $2,250, because she was over assets by about liquid assets by about $4,000, she needed to bring $4,000 to the table. So I think that's it. I just wanted to give you a little bit of an example. You know, it's kind of hard to give examples, but this particular program can truly increase the purchase power of the buyer. You know, when we can go up to $25,000 and in some instances go up to $40,000. So I think that's it.
Okay, we're going to open the lines for some live questions and answers. Once I do that, I did notice there are some people who aren't muted, so there was a lot of background noise. Just bear with us on that, but I'm going to open it up. And Tony Lake, you had a lot of questions that you had typed in. I would like to go ahead and invite you to ask your questions first, maybe. Radio. Yeah, somebody does have their radio on. I'm not sure if you guys are hearing me.
With family and friends. On behalf of the First Interstate family, season's greetings.
Notice First Interstate Bank wanted to get a plug in there.
Yes.
I don't know what they
whoever that might be, could you please mute your line so we could do some question and answer sessions?
They must have their phone on hold.
They must, yeah. Well, Tony, if you'd like to ask your questions, just go ahead and maybe shout a little bit.
Individuals who reside in communities where we operate. Whether it's large commercial loans, small business loans, or reliable digital banking solutions, we deliver these financial solutions and many more at locations
Does Tony
throughout
work
Idaho,
at First Interstate?
Montana, Oregon, South Dakota, Washington,
To be honest,
and
I
Wyoming.
am not
Member
sure.
FDIC.
Does anyone else have
Helping
any questions?
I have a question. This is Kim LaPierre with First Security Bank in Missoula.
Hi, Kim.
Hi. So my question is, according to the county guidelines, it doesn't look like we can offer this in Missoula or Ravalli County, correct?
That is correct.
Thank you for continuing.
So those
to
would
hold.
be
A
HRC
client
loans,
service
correct?
representative will be with you shortly.
Correct. Missoula HRC receives the same funding, and so however they structure their program for down payment and closing cost assistance, you would go through them.
Okay, thank you.
Hey, Lori and Michelle. Yeah, hey guys, this is Colleen from Helena. I just have really 2 quick questions. So when you talk about having, let me find my note here. Well, first of all, is there any shared equity calculations at the end when this is being paid back?
No, this does not have an equity share.
Okay, perfect. And then my next question is, when we talk about a maximum asset of $70,000, what makes up that? Like the cars you own, your retirement plan, what makes up that $70,000 cap?
Yeah, it would be everything else. It would be the liquid assets plus their cars, their household goods. We'll ask for an estimated total value of their household goods and their retirement.
Okay.
It's everything.
Perfect. Thank you for clarifying that for me. And then just a point of reference, I did not know you guys would go up to $40,000 on a manufactured home without a stated disability. That's incredible information. So thank you guys for that.
Oh, I know. And you know, that is exciting. I mean, 40,000 is a big chunk, and it is
huge.
Exciting. Yeah. So
hey,
I'm
thank you guys
excited
for the
to
great
learn about it.
information.
First Rewards World Mastercard, a credit
I'm
card
going to go
with a
ahead and
uniquely
mute
local
everyone's
spin.
lines again so that the majority of us can at least hear some questions. I do have some that were typed in as we were going along, so I'm going to go ahead and present those. And then Lori can give you the answers. Unfortunately, I don't think the live Q&A is going to work today with that person that's on hold. So let me see. Tony Lake had asked, is that on the 1st? I'm not sure if that'll make sense to you, Lori.
Well, she's probably asking something about the first mortgage. I just don't know what she's wanting to know about that.
There was another question. Can you please give more information on the MBOH 3.75 interest rate? Sure.
By using this program, this Home 0% Deferred program for folks 80% or below, you can, on your first mortgage, use a special set-aside rate at MBOH that is currently 3.75. So if NeighborWorks is going to approve a subordinate mortgage using this program, you will be able to use on your first mortgage an interest rate of 3.75, and it's a special set-aside rate from Montana Board of Housing, because you are using that first mortgage in conjunction with this particular loan product. It's wonderful.
Okay, and we do have another question. Is it 90 days from closing or app date for subject to being rented?
It's actually the date of the buy-sell. So 90 days from the date of the buy-sell.
Okay. And then another gentleman asked, the manufactured home, new or used?
It can be either. Just know if it's used, we will have another inspection. So we'll have that HQS inspection, we'll have the environmental review, and we'll have a mobile home inspection by a certified mobile home inspector.
Thanks, Lori. That's all the questions that had been typed in. And I do apologize about the live Q&A. We were really hoping to engage with you guys today. But one thing to keep in mind is that we are always here for you. Lori, Candace, Pat, they're just a phone call or an email away. We do also have a For Lenders page on our website. And if you guys run into information that you think should be there, definitely drop us a line and let us know that. We will be sending out a short email with a short survey very soon. So please do watch for that. We really would appreciate your feedback. I know technology is great, but sometimes there's little hiccups here and there, as we've noticed today.
Any questions typed in since you last talked?
No, nothing sent.
Okay. Can I have almost the last word?
You can.
I just want you to say.
Wait. This is Mary in Kalispell. Sorry, I see on the chat. I've typed in a couple questions and I see a couple others. Do you guys not see those?
Well, she's looking.
I mean, I'm happy to ask my questions.
Ask them.
So can you use the NWMT 0 deferred and use that second mortgage as the borrower's contribution to the 1%?
Okay, so let's see. That would be using that NWMT 0% deferred program.
Right.
So you would have the first at NWMT, second at the NWMT 0% deferred, and then we could come in third position with this loan.
Right.
So what's the contribution question?
So can the NWMT second be considered the borrower's contribution? Or do they still need to bring in 1%?
I think they're still going to need to bring in 1%. Yeah.
Okay. Okay. And then looking at assets, if the borrower on a bank statement had a large deposit, but they used those funds before they entered into contract for something, maybe pay off a car or whatever, and when you look at their balance, it's at or below the 5,000. Is there anything else required since they had a large withdrawal?
Not particularly required, but we probably would ask for an explanation of that large deposit. And if it makes sense to us and, it was used for a good purpose, that would be fine with us.
Okay.
And I do see a couple of questions too.
Mary, do you have any more questions? I think Michelle has found those other questions now.
Well, 2 of them are from me, the ones I just had. Take the other one and then let me look at my notes because I did have one more question.
Okay.
So it's asked, what is the need for doing this program for $25,000 to $40,000? Seems like more money than the borrower would need.
Well, I guess it's kind of based on the area. Some of these first-time home buyers in the high-cost areas have a terrible time trying to find something affordable. And by increasing their purchase power by $25,000 to $40,000, that allows them to get within the range of a first-time home in those higher areas. I just think it's a great program for that lower income borrower because they're getting this funding at 0% deferred.
Okay. And there was another one, can you touch on income calculations? I know they are different and they look at least 2 months only, but some borrowers who are seasonal or part-time, this can fluctuate quite a bit.
Well, with any income calculation, everybody kind of does their own and it can be very subjective. The funder MDOC does give us guidance on how to calc the income. We start with 2 months worth of pay stubs and we average those. but we also need it to make sense. So, you know, then we're going to look at the VOE, you know, and see if that can bring us any enlightening information. If it's a seasonal worker, you know, we will certainly adjust for that. Probably would calc it similarly to how you would. For the most part, income calculations are okay. It's just we're going to start, our initial calculation will be with 2 months worth of pay stubs. And then we'll go from there. If that does not make sense, then we'll go on to, you know, the VOE, or learn more about the applicant's job, that it's seasonal, etc. So we will work with you, and we will work with the funder to, you know, get the correct income calculation.
Okay, and we had one other question come in. Do you require bank statements, or are VODs okay?
VODs are okay. If you have a VOD, that's fine. If we have bank statements, we're going to ask for 2 months worth of bank statements. Depending on, you know, what we see on the VOD, you know, maybe their average balance over the last 3 months and their current balance. I mean, if there's any questions on the VOD, we might also ask for 2 months worth of bank statements. But initially, for assets, we only need a VOD or 2 months worth of bank statements.
And let's see, it looks like another one may have come through here. This is from Mary. If borrower is the current renter, is there any minimum time they have to have been renting?
No.
Cool.
Not at all.
Does anyone else have any other questions at all? I don't see any coming in through the chat, but
please know you can call myself, Lori, or Candace, or Pat anytime, ask us any questions. I know that this gets a bit complicated, this program, but hey, just pick up that phone and call us, or just email us, or whatever. We're here to help you.
And we can also always do further personalized training. We can offer personalized webinars or phone calls, either way. So never hesitate to give us a call. I did want to just do a very quick announcement that our next webinar has tentatively been scheduled for April 23rd, which is another Tuesday. This presentation will talk about our statewide low and moderate amortizing second mortgage product, and we'll keep you posted on those. I do also want to apologize. I realized I made a mistake when giving the phone number to this webinar. I did not provide the code, and so I think some of the people who registered missed out for that. I'll make sure that that information is included next time. So we really thank you guys all for joining us, and we hope you have a good afternoon. And again, just please feel free to give us a call if you ever need any help. Thanks, everybody.